Hello and welcome to the last EFRAG update podcast of the year. I'm Kathrin Schöne, Financial Reporting Director, and I'm joined today by Ioana Kiss, Advanced Technical Manager.
Hello everyone, it's a pleasure to join you.
Together we will walk you through the latest November news and highlight some developments in financial reporting. Let's start with the current open calls for candidates. First, there is a unique opportunity for financial reporting experts to join the EFRAG Financial Reporting Technical Expert Group, which gives technical advice to the EFRAG FRB. This is your chance to help shape the global financial reporting standards. European perspectives play a major role in developing IFRS. So the deadline to apply is 15 January 2026, and interviews will be held online in January and February. Second, we had a call for members for the refreshed user panel. The deadline was 8 December. The panel provides user perspective to EFRAG's Financial Reporting Technical Expert Group and for some selected topics to the Sustainability Reporting Technical Expert Group. Eligible candidates are equity investors, credit analysts, valuation specialists, or representatives of credit rating agencies. Currently, we analyze the applications received and might come back with a request for candidates with a specific profile at the later stage. This is to have the right mix in the panel to provide feedback. For all the details on what you need to apply for any of these openings, don't hesitate to head over to our website. Let's now turn to some of the developments on technical projects. In November, we also had several public consultations, Ioana. Can you tell our listeners a bit about those?
Yes, certainly. At the end of November, EFRAG closed its consultation on the draft endorsement advice for the amendments to IFRS 19, subsidiaries without public accountability disclosures. The feedback we received was highly supportive of the draft advice. The EFRAG Financial Reporting Technical Expert Group, together with the EFRAG Financial Reporting Board, will consider the final endorsement advice for approval at their joint meeting on the 17th of December. Once the final endorsement advice is submitted to the European Commission, the Commission will begin work on endorsing the full package of the reduced disclosure standard, including IFRS 19 and its amendments. Looking ahead, the next major public consultation will be on EFRAG's draft comment letter on risk mitigation accounting, previously known as dynamic risk management. If you're interested in having your say on the ISB's proposals for this project, keep an eye out for the EFRAG's draft comment letter and the survey on the proposed amendments to IFRS 9 and IFRS 7, which will be published in February next year. Now, for those of you interested in the project, an interesting read is EFRAG's publication of the survey findings on dynamic interest rate risk management practices. The survey looked at current practices and capabilities in dynamic interest rate risk management among banks, insurers, financial conglomerates, and other entities. The findings show that 92% of the respondents from the banking sector manage interest rate risk dynamically, mostly at both group and subsidiary level, while only 47% of insurers do so, with just over half of them managing it at both levels. If you would like to explore the survey findings in more details, you can visit the EFRAG website. That's all from me on this topic. Kathrin, over to you for the next part.
Thanks, Joanna. Now let's turn to a series of workshops on intangibles that concluded in November. In these workshops, users shared their views on the information they need about intangibles and related expenditures. The ISB's research identified various, sometimes conflicting information interests, and the workshop served to clarify the reasons for this and to find out whether there are sector-specific causes or whether this is related to the type of intangibles or related expenditures. The outreach covered both recognized and unrecognized intangible assets and related expenditures and explored potential improvements for financial reporting. We will present a summary of these workshops at the joint EFRAG FRTech FRB meeting on 17 December, and we will in addition publish a summary report. So stay tuned to hear which information they require for intangibles and where it should be placed. We will inform you as well about the economic reasoning behind this and whether there is any difference between industries or sectors.
Indeed, Kathrin and I would like also to invite you, our listeners, to stay tuned for another interesting read. In mid-December, EFRAG will be publishing its discussion paper on connectivity. This is a deeply researched and richly sourced publication that delves into the nature of connected financial and sustainability information. It's a great opportunity to see how connected information can enhance reporting by entities. The discussion paper will be supported by another document including real-life illustrations drawn from actual company reporting. Moving on, let's take a closer look at our main public meetings in November. On the 26th of November, EFRAG FRTech and representatives of European standard setters covered several topics ahead of the Accounting Standards Advisory Forum on the 1st and 2nd of December. Let's start with the statement of cash flows and related matters. On this project, members supported extending the requirements on management performance measures in IFRS 18 to apply to cash flow measures, as well as supported improving the disclosure requirements for non-cash transactions, both in terms of content and location of the information. A few members also considered that certain types of non-cash transactions, such as principal versus agent payments and settlement via cryptocurrencies, should be reported in the entity's statement of cash flows. Kathrin, could you tell us a bit more about the other updates on intangible assets and provisions?
On the project on intangible assets, feedback from recent outreach activities was presented, including the workshops mentioned before. In addition, specific needs linked to emerging types of intangibles and new ways of using them was shortly discussed. Another topic was provisions targeted improvements. Members expressed their support for the ISB tentative decisions on levies. This included introducing a definition of the levy year and specifying application requirements for levies. Members also discussed the rationale for the new discount rate approach proposed as part of the amendments to IAS 37. And another interesting topic discussed was the IFRS IC agenda, covering several issues related to the implementation of IFRS 18. Members appreciated to address application issues and encouraged constituents to address further application questions to the Interpretations Committee within short notice to ensure consistent application of IFRS 18 in the future.
Building on that, on business combinations, disclosures, goodwill, and impairment, members representing the user community continued to support disclosing performance information in the financial statements, including having a qualitative statement of whether the actual performance of a business combination is meeting its expected targets as set at acquisition. However, the majority of members representing the preparer community maintained that this type of information should be disclosed in the management report rather than in the financial statements. There was broad support for reducing the population of business combinations for which an entity would provide expected synergy information. Members also discussed the project timeline and scope of the post-implementation review of IFRS 9 hedge accounting, as well as the latest developments on the project concerning amortized cost measurement. Lastly, EFRAG continues to engage stakeholders as part of its recent project on the voluntary ESAP template for SMEs and startups. Specifically, the project is evaluating the views of both potential preparers, such as SMEs, and users, including investors and banks, regarding the proposed disclosures and possible content and structure of the template.
Thank you very much, Joanna, for this final update. I would like to take this opportunity to thank all our stakeholders who engaged with us throughout 2025 in the activities of the financial reporting pillar. Your contributions are invaluable and help ensure that EFRAG's work remains relevant and impactful. So please do not hesitate to contact us if you have any remarks or questions outside the public consultations. We are open to discuss your concerns and proposals. And of course, thank you to all our listeners for tuning in. We wish you a very happy holiday season, and we look forward to bringing you new updates and insights in the new year.